Are you shopping for a financial advisor? Well, today I want to make sure you walk away with the one question you need to make sure that you understand from every advisor that you interview. And that is, how are they compensated? So, the first thing I want to go into is the different types of advisors there are out there. So, it really comes down into three different buckets. There is fee only, there is commission based, and then there is fee based. If an advisor is fee only, then the only person that is going to pay that advisor is the clients. They are not going to receive any source of income from anybody except their clients. Now, a commission based advisor is going to collect a commission based on what products that they sell to you. Such things as life insurance, or if they put you in a specific mutual fund, they will get kickbacks from those funds and from those other outside agencies for selling you those products. And then fee based is a product of the two. So they may receive a fee based on, let's say, assets under management, but they would also receive kickbacks or commissions from selling you specific products. So they're still allowed to say fee based, but if they say fee only, then that means that they are not allowed to collect any commission. So a fee only advisor, there's generally breaks into really three different buckets, but two of them branch off of. So for the fee only advisors, you have your assets under management model where you pay a specific amount. It's usually between 1 and 1.5% of the assets that are being managed by that advisor. And then that goes up and down as your portfolio goes up and down. The other one is considered advice only. And advice only, you're not paying a percentage of your assets. You're paying a specific price agreed to in a contract. Generally, these advice only advisors will break their services down into one of or all of the following. They can either do it based solely on hourly, where you just pay them an hourly amount regardless of what you talk about. This isn't very common to see somebody that just offers hourly, but some folks will offer that. The next one is a subscription. This is becoming more and more popular. And this is where you pay a subscription, almost like your Netflix, where you have access to the advisor all year long. The advisor generally has at least quarterly, sometimes it's semi-annual follow-ups with you where different topics are discussed along the way. And a lot of those are tailored to you as the individual and what your needs are. But you would also have access to the advisor all year long in case you had a question outside of your normal timelines. And the last one is project based. And this is more of what I do. And then I'll follow on with hourly. And the project base is either like a complete comprehensive financial plan, or maybe you just have a question about education planning. And so you hire a financial advisor to just work on that project. So it can either be the full comprehensive plan, which is what I do, or you can also have some advisors out there that may do a specific project based. So now I want to kind of talk about the pros and cons and how they differ between your fee only and then commission based. So the biggest one is how the advisor is paid. Fee only, you're paying the advisor. Commission is going to be paid by whatever mutual funds or life insurance policies are being sold. They're going to be getting a kickback for having those products sold, or they're having those products held. Like, let's say a mutual fund, they would continue to get kickbacks for having that fund held. The cost visibility, when the fee only, you pay what you see in the contract. Now, it may fluctuate based on your assets under management, but you know exactly how much you're going to pay. In the commission based, you may or may not know how much that advisor is being paid to have you in certain funds. The other thing is you don't know if they're going to be paid more or less by putting you in that fund versus maybe a potentially other fund that might be still appropriate for you. The regulatory standard for somebody that is fee only is a fiduciary standard. They have to operate in your best interest. Typically, in a commission-based form, they're going to be held to a suitability standard where it has to be suitable for you. The incentive structure is very similar. You're going to be incentivized to do well by the customer in fee only so that they stay and remain with you as a client. And the incentive for a commission base is going to be sell those high paying commission based products. So a fee only is going to have fewer product related conflicts because there is going to be some incentive to offer higher paying products in a commission based advisor. Now, access to annuities and life insurance products, you're generally not going to get that from a fee base. They can refer you out and recommend certain products or recommend against certain products. versus a commission-based advisor is likely going to be able to sell you those products directly. So who fits each? If you want clarity in how much you're paying, then maybe the fee only is right for you. If you want to maybe limit the amount that you pay up front in, let's say, a complete comprehensive plan, and you want to spread that out over time, and you're not so concerned about those conflicts of interest, then maybe the commission based is right for you. The fee based is going to be looking for that comprehensive plan, looking to see how they can help you in different aspects of your financial well being. The commission base is generally going to be selling packages of products and looking to get you into those higher paying commission products. And now when looking at the fee only, the assets under management model versus that advice only model, and how do those compare and what are the pros and cons of each? So again, we're going to look at how the advisor is paid. Assets under management, it's just a percentage of your assets. So if you have $1 million and you're paying 1%, then you'll be paying $10,000 a year. The advice only, it's going to be whatever the contract says. So if the contract says $2,500, if it says $5,000, you're going to pay whatever the contract is. Or if it's an hourly rate, you're going to pay whatever the contract says. The cost predictability for both is relatively straightforward, although the assets under management model does change if your assets grow, but generally that's a good thing for you as well. But your account could increase over time. So if you're only paying, let's say, $500 to $1,000 right now, but you're only 22, by the time you're 60, you may be paying $30,000 a year. It will grow as your assets grow versus an advice only model. It's going to be whatever that contract says. Now, those prices may also increase over time with inflation, but it would probably not be at the same rate as, let's say, an assets under management. Incentive structure for the assets under management model, they're going to be incentivized to keep as many assets under management as possible. So the one thing to watch out for is a lot of times they do want you to roll over your 401ks into being managed. And they're also less incentivized to do, let's say, Roth conversions, where now you're taking money out of your account and maybe paying the taxes from a taxable account, thus reducing your overall assets, which will also reduce the amount that they get paid. So there are some slight conflicts of interest in an assets under management model that you do want to be aware of. For client fit, the majority of advisors out there are going to be in that assets under management model. So if you're looking for a specific advisor and they meet all your other expectations, just make sure that the percentage is something that you're willing to pay, and that might be a good fit for you. If you like to do things more on a DIY perspective, where you want to have control of the assets, you want to be able to buy and sell in the account, but you do want that second opinion, then advice only might be the best option for you. Now, your assets under management model, it does tend to lead more to an investment management focus. However, most advisors that have an AUM model will do full comprehensive financial planning. The advice only, it is going to be tilted somewhat to investments, but you're probably going to see more of a holistic approach in an advice only model. The other thing is if you have a minimum amount of assets, or let's say you have a large 401k balance, but you don't have many assets outside of your account, well, then you may not work for an AUM advisor because they probably have a minimum of, let's say, $500,000 in assets. Now, each advisor is going to be different, so you can check on what each individual advisor has as a minimum. And generally on the advice only, there is no minimum because as long as you can pay the fee, then they will be happy to advise you. And conflicts of interest, we've already talked about this a lot on the AUM side. Realize that they are going to be interested in bringing as many assets into management as possible. And on the advice only, there is going to be a conflict of interest in, especially if they go to an hourly model, the more times that they talk to you, the more money they're going to make. So there is motivation to keep you coming back and keep charging you an hourly fee. So that is something to be aware of. That is their conflict of interest. Implementation on the AUM, generally they're going to be making all the buys and sells in your account. Now, depending on the advisor, you may still have access to the account, but you may not. In the advice only, they may be able to be working in your account, but most likely this is going to be a DIY where you are making the buys and sells in your own account. And then the best use case scenario. So if you want a full hands-off approach, you're looking for that white glove, just do it for me, then maybe the AUM is your best fit. If you're more of that DIY person or you're looking for a second opinion, then maybe the advice only option is best for you. So I hope this video helps solve some of your problems as you approach your decision as to whether or not to hire a financial advisor. Again, these are just things to consider, but please make sure you understand how your advisor is getting paid, because there are advisors out there that are charging an assets under management model where they're charging all the way up to 1.5%. And then they're also getting commissions where they're fee based, and now they're getting commissions and they're selling you and putting you in very high expense ratio funds and getting very large kickbacks for those products, which may or may not be in your best interest. So please understand how each advisor is getting paid before you hire yours. If you like this video, please go ahead and subscribe. And if you've got a comment or have a request for a future video, go ahead and throw it in the comments below and I'll be happy to answer. Thank you for your time. Information provided in this video is for educational and informational purposes only and does not constitute financial, investment, tax, or legal advice. I am not your financial advisor, and you should consult with a qualified professional before making any financial decisions. All investments involve risks, including the potential loss of principal. Past performance is not indicative of future results. This video does not endorse any specific investment or strategy. By watching this video, you agree that I am not responsible for any financial outcomes based on the information provided.